energy and air pollution will be one of the top 5 issues for the general election.
We talk about Putin being in control. He's not really. It's the various factions under him, and it suits them to have him at the front.
If you're trying to save for a house deposit and you'd have to save up some crazy amount of money, how on earth are you going to do that if a pint is £7?
There's certain key things that we want from India and there's certain key things that they want from us.
Hello, you're listening to Bloomberg UK Politics. I'm Caroline Hepker.
And I'm Stephen Carroll. Welcome to the programme. Caroline, have you taken out your scarves yet?
I have.
Yeah, exactly. The chill wind that's blowing through us all. Is it the weather or is it a recession that's coming? Bloomberg Economics' latest analysis says that we may already be in a recession. Dan Hansen, our senior UK economist, regular guest on the programme, has been saying for some time now that a recession was coming. Not necessarily a popular opinion among economists. The Bank of England and others expect the UK will just about avoid a downturn, but Dan and his colleagues have been doing their homework on this, and their model now shows a 52% chance of a recession in the second half of this year, which implies that we're already in it.
Yeah, well, look, part of the whole idea of the Bank of England raising interest rates so sharply is to slow inflation, and that would be recessionary. How important is it? Look, it's just another terrible word, isn't it? Pandemic, war, inflation, now recession to boot. I think it's quite grim.
Yeah, I just wonder as well how much of an impact the word recession, whether or not we are in a recession, really matters to people, given all the other challenges that are out there before. It's always been one of those words that does cut through with people and is sort of something that people, I suppose, generally talk about. It comes up in conversation. But I wonder this time around, because the expectation is it will be quite a mild recession, will people be able to fill it with everything else that's going on as well? I think it'll be an interesting conversation politically. Yeah,
absolutely. And I think if unemployment remains quite low, that could also be a factor. I think that's the really big variable for the UK economy.
So that's the situation that we're in now. But we wanted to take a look at where things may go in the future. That's at least if Labour wins the next election.
The think tank Labour Together says that it's finding the bold ideas for a new Labour government. It was set up, of course, by MPs, including the shadow Chancellor Rachel Reeves, and it's put forward a number of policy papers recently, from subjects including artificial intelligence to security and the culture wars. We're joined now by Labour Together's Chief Economist Kevin Ferriter. Welcome to the programme. So I want to talk to you about the paper actually that you've authored and been central to, which is around the UK economy and thinking about what a potential new Labour government would do when it comes to fixing the UK economy. I suppose let's start just by trying to understand what you think is the diagnosis for where we are right now economically in Britain.
Thanks so much for having me on. So, I mean, everyone knows we're not in a good place. I think your own economists today have come out and said we are now in recession. But actually, if we zoom back a little bit, it looks, even worse in a way. We've had no real wage growth since, going back to 2005 now, real wages haven't increased. And we've just had 13 years of stagnation and insecurity. And, the way we've been looking at this is we've said, OK, at the heart of this is a sort of failure to increase productivity growth. And that can be directly traced, and this is, the ONS's numbers themselves, to a failure to invest. And so we think that, and this is true at both a regional and a national level, that it's the failure to invest that has led to this long-run stagnation that means that we've been in such a bad place when this shock has hit.
I mean, you mentioned our own Bloomberg Economics analysis that suspects that the UK is already in recession. The Bank of England also essentially saying that they expect economic growth to stagnate until mid-2025. The issue, though, is that this is a widely diagnosed issue. I mean, productivity, I've been a financial journalist for a few decades, and actually the productivity issue going right back, 20 years has been the major problem, even longer, 30 years. Can any government realistically change that?
Yeah, so I mean, this has been an area of comparative weakness for the UK for some time. And, if you look at the sort of gap between us and other advanced economies, just the average advanced economy, we invest about 6% of GDP less a year. And about 1% of that is public investment and 5% of that is private investment. And so what we need to do is find a strategy to induce more private sector investment. And part of that is about catalyzing public investment, like you've seen with the Inflation Reduction Act in the US, which has brought in more than $200 million of private investment. But it's also about regulatory changes and breaking down barriers such as planning reform, and also about working in partnership with business and workers in a way that hasn't been done for many, many years, and will provide sort of consistency and a coordinated approach.
Okay, before we get into some of the specifics of your plan for growth, I wanted to play some of a recent interview that we did with Paul Johnson from the Institute for Fiscal Studies. We spoke to him last month about how a government, any government, can create growth.
Well, it's easy. I mean, we know how to do it. I mean, we really, 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 really do know how to do it, but we decide not to. I mean, it's, so sorting out the planning system, sorting out the tax system, as we've just described, would be good for growth. We know that. Sensible investment in infrastructure is clearly important, and not cutting spending on further education and vocational education, as has happened over the last 15 years or so, building the roads and airports and so on that we need, having a consistent strategy towards competition and R&D and all those sorts of things, and freer trade with the European Union. I mean, all of those things we know would be good for growth. And yet in each case, we have essentially prioritized other things. We don't build houses because we prioritize people who already have houses. And that means that people can't access the high-paying jobs in London and the southeast. We don't build the infrastructure which would link the Manchester and Sheffield and so on to surrounding areas, so that people there can get into where the jobs are. We have cut spending on education, and particularly cut spending on education post 16. We cut through the 2010s. That's not quite so much now. Spending on infrastructure generally. As I say, we know what to do, and we don't do it largely for political reasons. There's short-term cost and disruption against long-term, quite hard to grasp positive stuff through growth. So, it's always easier to say, well, triple lock the pension, or increase spending on wages, or do more on health or something, all of which are good things, but also popular. Whereas driving a road through someone's back garden, or building houses in the field across the way, or increasing taxes to increase spending on education, or whatever, those are unpopular. So it's the politicians are feeble, but actually the electorate's pretty feeble as well.
So that was Paul Johnson there from the Institute for Fiscal Studies. So there you have it. It's well understood, but these are long-term gains, and it's hard to convince people to do it. Does Labour have the political will to do the unpopular? Mm-hmm.
So, I mean, I kind of agree with pretty much all of Paul's economic analysis there, and I think that's quite consistent with what we talk about in the paper. On the political side, I'd actually say Labour are in a very different place to the government on this. So, firstly, let's kind of zoom back and look at what the public want. I think if you go and ask people, do you want building in your local area, they might often say no. But if you ask them, do you want a kind of program of national home building that involves building in your area as well as elsewhere in the country, they're a lot more up for it. And, the thing that Keir Starmer has sort of promised, when he said, I'm a YIMBY, I'm going to break down, bulldoze the barriers to building, is this kind of complete sea change in our approach to these things, and it'll look completely different to the way the current government has been treating it. There are some people in the Conservative Party who do want to do some of these policies, but they will never be able to do them with the coalition they have. Labour has the coalition that will be able to put these things in place.
Some of the things like changing planning laws, has been mentioned by the government several times as plans of things that they want to do. Some of these ideas are things that we've heard of the government, but you say that it's the political buy-in that's different about your plan.
Yeah, the Prime Minister is not in control of his party. The far right of the Conservative Party put a kibosh to all of these plans, even where, there may be some sensible ideas there. Whereas we've got a united party, wants to push these things forward.
The issue, though, is surely, and when it comes specifically to the housing market, and you've actually talked about a number of areas that you want Labour to focus on, housing being one, infrastructure and energy being the other two. But just if we think about housing, I mean, surely the major issue is how you crowd in that private sector investment. And for house builders, how does Labour convince house builders to deliver more homes? You've talked about GB Homes, this new government vehicle, which would be a kind of national master plan for home building. GB Homes is going to have a very big stick to get the private sector to deliver that.
So I think the most important thing there is consistency. So, you can't deliver 1 million homes in 1 year. You need to build the supply chains. And, that's a thing that comes out very clearly whenever you speak to businesses. We could be building homes at a much faster rate than we do. We just need to give the industry the time to build their supply chains to do that, and they just need to know that there is a clear fixed plan. And the problem with the current government is they flip-flop and there's no consistency at all whatsoever.
Surely it's also about margins, about the profitability of each home that is built. I mean, a mass infrastructure programme, building a lot of homes, is also about telling those businesses that the margins are going to be different, i.e. build more homes, smaller margins per home.
So I actually think the key thing that changes the economics is the planning reform that switches. So currently, if you do a compulsory purchase order, as you might need to do for new towns, you have to pay what's called hope value. So it's not the current use value, say agricultural value, but the value with some probability that it might get planning permission in the future. And this law was brought in 1961 by the Conservatives. It meant that you couldn't do the new towns plan like it was done by the Labour government after the Second World War, which turned out to be massively profitable for the government. Instead, all of the margins of that were killed. What the Labour Party want to do is get rid of that law and go back to a situation where you pay people the current use value, and that completely changes the economics of building.
But you're talking about the new homes idea being delivered via compulsory purchases of land in the UK?
I think if you're going to build new towns, you have to be realistic that there will be some compulsory purchase orders.
Thinking more broadly about that's one part of the plan. Ultimately, the fiscal situation will determine how much the next government will be able to do. The Centre for Progressive Policy put out a report last week saying that the next government will need to raise taxes as public services are going to need an extra £142 billion just to maintain them at their current level. How do you plan around a very, very tight fiscal situation? Where will the money come from?
So, one of the things we look at in our report is how different the sort of situation for public services would be if we'd had adequate growth over the last 13 years. If we just kept track with our competitors.
But you weren't in charge, essentially. So we need to think about what happens next.
Yes. So we're now in a situation where, because we're so far from the frontier, we can actually catch up with what other countries are doing. And so there's actually an opportunity, if you put consistent and thoughtful policies in place, to have a decent clip of growth. And that is where you'll be able to transform public services. As Paul Johnson has pointed out quite a lot, what we currently have is the biggest tax-raising parliament in the record books. And, that isn't a strategy that can be continued. Instead, what you need is to grow the economy, and that's how you can deliver better public services.
Yeah, but UK demographics over the next 10 to 20 to 30 years are going to be pushing hard against that idea because, you're going to need more money for so many things. Look, this idea, though, and I was at the Labour Party conference, Tory Party conference too, but at Labour, again, this idea, it seemed to me that Keir Starmer is clearly pushing for a two-term Labour government, which is fine. But how do you convince voters to do that? Because you have... Surely you were talking about an amazingly miserable economic outlook and deliverables that are going to take years, i.e. potentially a decade for voters to see. That is a very, very hard sell. Levelling up has not worked for the Conservative government, to try to increase wages and growth. according to Bloomberg analysis. How on earth does Labour convince voters, the pain that they have to continue in the same pain?
Mm-hmm. So I think this is a really important point. And, we at Labour Together have gone around the country and talked to voters about this at length. And the thing that we've heard is that, people know Rome is not built in a day. They know that we're in a hole and we've got to claw our way out of it. They want an approach that, mitigates some of the risks. We don't want to be gambling with the public finances in the way that the Conservatives did last autumn. But at the same time, you've got to build from here. And it will take time, and they know that. And they are willing for that to happen. And I think this is one very important point here, is that the kind of approach to government that Keir Starmer has set out is having it based around missions. And, these are not just, flashes in the pan that will change every time the minister changes in a given department. It's about looking over the next 10 years and having that as an anchor that will provide consistency for everything that goes on in government.
Those three acts, though, that you've talked about on energy, on housing and on infrastructure, surely Labour's going to have to commit to those happening in the first 100 days, at least coming up with the policy swiftly and enacting it fast. You're going to be under pressure to deliver. So,
I'm very, very, it's very, setting the parliamentary timetable is very much above my pay grade. But, I do think that those are things that you want to get started early. I completely agree with that point.
I'm still stuck on this idea of where the money comes from, essentially. Will people be paying more taxes? Will borrowing have to go up? I understand your long-term plan is to create growth, but that doesn't help the first few years of government when the books don't look good now. Where does it start?
So, firstly, it's absolutely it's not from higher taxes. That's been set out very clearly. Secondly, the point about this isn't to have loads of new spending commitments. The point about this is to have a strategy that involves the public investment that's been set out, but also pairing that with regulatory tools and a partnership approach to maximally crowd in what the private sector does. So it's not about just sticking loads of stuff on the government's balance sheet. It's about a sort of whole approach that we use.
The one word we haven't used in this whole conversation is Brexit. The economic analysis shows the hit that the UK took from Brexit. Obviously, Conservatives, but Labour too, are very much stepping away from talking about the hit that has taken. Labour's position on Europe and on ties with Europe is still really confused, and having closer trade ties with our closest neighbours is still going to be enormously important over the next decades to increasing long-term economic growth for Britain. Does Labour have a plan on that?
Yeah, Labour have talked about, and Keir Starmer's talked about wanting to develop a closer trading relationship. And, that doesn't mean rejoining. That's obviously something that's not really on the table right now. But there's a lot that you can do that will deliver a boost from where we are that is consistent with what the public want.
What's the first priority for a Labour government for the economy? What's the first act that will start to make a difference and set in motion all of the things that you've talked to us about?
Yeah, again, above my pay grade, but I'd do planning first. I think that is the thing that unlocks so much in so many different areas. It's ridiculous that it takes over a decade to build a sort of wind power, and it's ridiculous that we can't build a railway in this country. And so many of these things are traced back to the planning system and the failure of the government to do anything about it.
Okay. Kevin, thank you so much for being with us. Kevin Ferriter is Labour Together's Chief Economist, talking us through some plans, the proposed thinking behind Labour policy from the think tank Labour Together.
So back in the present day, the King's Speech is coming tomorrow. That's when the monarch sets out Parliament's agenda for the next year. Now, Charles actually did read out the Queen's speech as it was last year, but this will be the first time he's making the speech as King. It's setting out legislative agenda. Lots of the announcements in it have already been reported. Our colleagues today reporting on the government planning to issue now annual licences for oil and gas drilling in the North Sea. That could be interesting given King Charles's environmental stance as well. So that'll be something to watch out for. But the King's speech may also give us some clues about the government's tax and spending plans ahead of the autumn statement on the 22nd of this month. Ahead of that, lobby groups have been lining up with their demands and what they want to hear from the Chancellor, and our senior economy reporter Philip Aldrick's with us now to talk about this more. First of all, Phil, does the Chancellor actually have any money to spend when it comes to the autumn statement?
The OBR decides how much money he has to spend, and in the first iteration of its forecast they said he had a hole to fill, it seems, and the second iteration of this forecast he's got a little bit of money to spend. So I think some economists have done some more up-to-date calculations, because the moving assumptions, which are interest rate, market interest rate assumptions, they do generate, or they move them, they move the money that he has around quite a lot. So I mean, he may have about 10 billion to spend on current estimates, but
which in the grand scheme of things,
in the grand scheme of things, would be something like the third smallest headroom ever since the OBR was formed in 2010. So even with 10 billion, because you're supposed to have a little bit of a buffer for some kind of disaster like a pandemic or war in Ukraine or Israel Hamas, but something in the tank, and 10 billion would normally be not adequate as in the tank. So you wouldn't think he has any money to spend, really.
Okay, so hands are a bit tied then. Business groups want more investment, and everybody's talking about the desperate need for more economic growth in the UK. And you get that through investing more by businesses. Any chance of that happening, or any other business support to actually kind of galvanise the UK economy?
Okay, so to qualify that statement, it doesn't have any money to spend. What I'm talking about is over the 5 years, there's a target there, and so this is permanent giveaways. I'm talking. So one of the things the business community wants is the full expensing, which is 100% capital tax relief against capital investment. That would be a permanent change in the tax policy, which would be far too expensive under current sort of thought, what looked like the current projections. That would be potentially a growth enhancing policy. So the Chancellor desperately has said several times it would be his priority tax cut, this tax relief programme, extending it for perpetuity. Other things which he might be able to do, if you could do it in the short term, I mean, he could perhaps roll because at the moment it's only a 3-year full expensing, so you could roll the full expensing forward by 1 year, so it continues to be a 3-year full expensing policy. You can do temporary tax cuts within the 5 years, so long as in the last year of the forecast you go back to policy as it currently is, which always looks like a fiscal dodge.
Do markets see through that if you do something like that?
I think everyone gets a little bit too sort of puritanical about how the markets see everything. Back in 2022, I guess nobody is even aware of what happened, but November 2022, so when Hunt and Sunak basically took over after the Trust disaster, but they changed the fiscal rules. So there'd been a rolling 3-year target to get debt falling. They changed it to a rolling 5-year target, which is quite a significant change. The markets at that point, just come off the Trust stuff, didn't blink at that change, right? So the fact that you could so how important are these fiscal rules to markets? I think the overriding sense from the budget package that it is public finances are being kept under control is incredibly important. But within that, small tweaks here and there, whether you do some fiscal illusion for 3 years where you basically give some tax cuts to businesses and then in the 5th year you take them away, they'll all say that's not really proper, mate.
I think you've just invented a pub quiz team. Fiscal illusion.
But I think markets would tolerate it.
But that's the problem, isn't it? Stability is in the eye of the beholder to some extent. It's about the belief that people have that that you're going to fulfil your promises, and that's not, that is, as I say, perhaps a judgment call as much as anything else. But what it also explains this, the other point that I sort of want to make to listeners as well. So interest rates, there's a lot going on with the Bank of England. When it comes to markets, investors and bond market traders think that the Bank of England is going to cut interest rates next year. Actually, at the last meeting, the Bank of England did not touch interest rates, but borrowing costs fell. And we spend so much time talking about, mortgages and so on. just explain why borrowing costs actually fell, even though the Bank of England actually didn't do anything.
Yeah, so that's because the borrowing costs that households and companies actually are priced off is not the Bank of England's rate, it's the market forward curve. And the market forward curve fell because there was the Bank of England's forecasts for the economy were pretty miserable, like, zero growth for a year and a half, and that's possibly inflationary. So it was. So if the markets are looking at this and they're saying, and also the recent data has backed that up, right? So they're saying that the longer term picture, you're going to have to see more softening in the rate trajectory. So therefore, if you're basically
they're
buying,
saying things look so bad that they think the Bank of England is going to have to cut rates.
Yeah, that's what they were saying. Yeah, exactly. So there was in the Bank of England's forecasts for interest rates that it uses of the market path, there was a 1/4 point rate cut by the end of 2024. By the end of the day after the Bank of England had released its forecast and its rate decision, there was 2 and possibly 3 rate cuts by the end of 2024 baked into the market path. So they basically took from the Bank of England saying we're going to hold rates high for longer. They then looked at the forecast for miserable, close borderline recession, and they said then therefore you're going to have to cut rates quite quickly afterwards, which is why then the market rates fall, and then that's why mortgage cost comes down slightly.
Yeah, and that's why it matters, right?
Yeah,
that's why
exactly.
bond markets ultimately matter to anyone who's got a business or a mortgage or is the cost of money. That's anyway. Phil, you've explained it so beautifully. Thank you so much. Our senior economy reporter, Philip Aldrick.
And I will join your Fiscal Illusion pub quiz team anytime you want. That is it from us for today. If you like the programme, don't forget to subscribe. Give it 5 stars so other people can find it on Apple Podcasts, Spotify, or wherever you listen.
This episode was produced by James Wilcock. Our audio engineer was Marifa Hussain. I'm Caroline Hepker.
And I'm Stephen Carroll. We'll be back with more tomorrow. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.